Hello, Maverick traders. Welcome out to your currency recap, October 2nd. The year has flown by. It's so much fun to trade with all of you, so let's get to it. We take a look at the markets, really meaningful news and things that are moving, and today is a Monday where some things are happening. So we'll talk about what's happening in the broader markets. We'll look at charts. Take a top-down approach to equities, see if we're in a risk-on, risk-off environment. Well, we know we've been on a risk-off environment, and we're going to look at the new trade setups that present themselves to fit with that outlook. All right, so as we look at the markets, first, what's moving, what's not. In crypto, which crypto's trading okay. I mean, as far as markets are concerned, crypto's one of the better markets right now. Bitcoin Cash is clearly the outperformer in the group. Bitcoin and Litecoin doing okay. I would say Ethereum looks like the worst of the bunch. If we look at currency land, it's more obvious what to short than to buy, in my opinion. I think pound and euro are the more obvious shorts. They are low basing. When you're really, really weak, and then the best you can do is just go sideways after a precipitous decline, it speaks to there being likely more downside to come. So pound and euro look like they're going to continue that downward trajectory. And now as we look at the rest of the market, let's start with news of the day. Crypto markets clearly stable. Precious metals have been very ugly since the Fed meeting, and the Fed pointing to being hawkish and more rate hikes and all of those things coming down the pipe. The precious metal market has just been an absolute disaster. Equities are now in a downward trend. We broke out of the symmetrical triangle we talked about a couple of weeks ago. As we stated, whichever way it breaks, it's going to break hard, it's going to break fast, and we've seen that. Risk happens fast, and you needed to be on top of things, and we highlighted those areas. Again, that was around the Fed meeting a couple of weeks back. So, as we look at crypto versus currencies, on the currency front, risk off. This is classic risk off where yen, US dollar, and Swiss franc, the three major defense currencies, are the strongest performers. The weaker performers being the commodity currencies. So classic risk-off scenario there today. The market makers, the market institutions, and so on, they're going to match up buyers and sellers, but this clearly shows us a discrepancy between quantities of buyers and sellers. It's an aggressive selling pressure where more people want to enter into defensive currencies and out of more speculative currencies. In crypto land, a little bit of a down day today at 1.3. Gold down about 1%. Oil took it on the chin, down almost 2%. And oil had been a standout performer. But when you get an environment like this, and we're starting to intensify on the downside, generally nothing is spared. So first, there's the leadership groups that fall, and then if the markets stay weak like they are, they come for everything else, and that's kind of what you're seeing there. Bitcoin Cash, like we said, slightly outperforming, up 2% versus the other currencies, which rolled over hard. Ethereum forming a big, ugly, bearish engulfing formation. Does not look good on the charts. Probably going to enter into a little bit of a sideways pattern versus the mild uptrends that they had been in. Now, risk-off environment for the past few weeks. We're below the 20, below the 50. That slope is rolling over. We are in a clear bear market environment. Let's look at the charts together. Here's what we had highlighted for weeks. We said we're in a tight consolidation. You expect sideways movement until you break out of the triangle. We broke out of the triangle here. Just as expected, selling intensifies because we broke on the downside. Had we broke on the upside, there would be a nice run higher, but that's not what happened. We broke to the downside, so who's in control? The sellers. We broke prior lows. It's a classic bearish pattern, and sure enough, the selling pressure came in aggressively. Now look at the price action. We're basing down at the lows. Not really anything too dramatic happening here. It's kind of chopping around for the past couple of days. May allow these moving averages to play catch up a little bit, but would there be expected to be more downside? Absolutely. The trend is lower. Expect lower highs and lower lows. Now, as we look at this week, we had Fed Chair Powell speaking today. In Australia, we've got the RBA meeting tonight with a rate statement. They're expected to keep rates unchanged. We've got the RBNZ meeting on Tuesday. They also are expected to keep rates unchanged. And then on Friday, we've got payrolls. So those are your three major catalysts, trading the Aussie tonight, the Kiwi tomorrow, and the US dollar on Friday. Possible trades. I said that my feeling, the more obvious trades are to the downside. So what are they? Well, Euro. We've been in a sharp downward trend as we've discussed previously. The downtrend line and these things are still intact. You have come down towards the lows, and all you've been able to do is base sideways for the past few sessions. If you look at this chart on a 12-hour, a 4-hour chart, it's all the same picture. We are in a downtrend and chopping sideways. This normally breaks and finishes on the downward side. The pound chart is probably even more compelling for a downside trade. A little bit more violent downtrend, still intact, very bearish, downward sloping moving averages, and once again, we're low basing. Not even enough buying pressure to get us in a normal pullback. All we can do is just lay there at the lows. We've been at the same level for the last 6 sessions. Again, pull it up on a 12-hour chart and you will see a massive low base pattern following a huge decline, and this would be expected to leave to the downside. So if you want to stay risk off, you might match it up against US dollars, you might match it up against yen, you might match it up against Swiss franc, and play one of those defensive currencies to the upside against something like pound. But the path of least resistance seems to be lower for British pound. I think those are the most obvious areas to look right here, right now, for possible trade setups. Continue to look at relative strength and relative weakness. Signs like these in the charts where something can't even get off the floor, or maybe it's good news but bad price action. Look for these little market tells and look to take advantage. As we said, there are some catalysts. There's an RBA meeting tonight, there are RBNZ on Tuesday, and then payrolls on Friday. We will continue to send out market updates. Have a great rest of your week, and we will see you next time. Goodbye, everyone.